We Filipinos still have a long way to go when it comes to investing for the future. We seem to prioritize instant gratification, but I think how to invest properly is something that we all need to be familiar with.
It's simple, really. You work today, you invest, then leave better tomorrow.
Besides, investing shouldn't be scary, you know. It doesn't have to be overwhelming. I mean, I started when I was a teen. I hope that I inspire my kids that when they're old enough, they'll tell me that they're excited to do the same.
What's important is to find a good reason to invest. It becomes so much easier when you visualize your goal.
People think I travel so much, and I have a YOLO or you only live once attitude. But the truth is, I travel because that's my business, and I make sure I invest in it, spend time for it, to give people the best experiences they deserve.
When people find out that they invest for what I'm passionate about, they always say, "What?" But I always just tell them that I can afford to fund my passions because of my investments.
The thing is, some people are just too shy to ask for financial advice. Like asking for help is seen as a sign of weakness, when in fact, it's through asking that we learn the best way of doing things, even in investing. With ATRAM, you can engage and be confident that you have a partner in achieving your financial goals.
People usually think investing means buying a house or retiring. Sure, it can, but saving for smaller goals is another way to do it.
People think investing is expensive. Nowadays, even with a small amount of money, you can already begin your investment with ATRAM. It's easy to make it a monthly or even a weekly routine. ATRAM makes investing simple, even for busy moms like me.
And even if you're always on the go, like me, you can keep an eye on your investments online. Plus, I'm confident that ATRAM, my trusted partner, will take care of my portfolio and make sure it gets invested in the right place.
Never settle for average. Why? Because life is what we make it, and a strong investment partner can help us live the life we want.
ATRAM is dedicated to delivering an investment experience that helps people get more out of life. In fact, it was built with that single focus, to help clients attain their investment objectives. We see Filipinos invest in their dreams and aspirations. With ATRAM, building the future is a task we can surely take on.
With ATRAM,
You
Can take on tomorrow.
Hello and welcome. I am Bea Lambitco, Risk Analytics and Solutions Officer, and it's my pleasure to be your host for this week's episode of ATRAM Webinar Series. Thank you for tuning in and joining us this morning as we discuss the best performing Peso Equity Fund in the Philippines today, the ATRAM Alpha Opportunity Fund, and what makes it different from all the other mutual funds in the market. We will also learn about the growth potential of Philippine equities to help guide your investment decisions and strategies. If you have questions, you may send them as early as now by clicking on the Q&A button below your screen. Before we begin, I'd like to let you know that this session will be recorded and that copies will be disseminated within the day, as well as posted on all our social media platforms. Also, please don't forget to visit our website, www.atram.com.ph, for a more detailed information about all the funds that we offer. If you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session and visit our YouTube channel, ATRAM Studio. We would like to invite you to join ATRAM's new official Viber community group, #ATRAMPH Community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit the link on your screen and get a chance to win ATRAM merchandise. So we would like this webinar to be as interactive as possible. So please don't hesitate to send your questions in the Q&A tab all throughout the webinar. Each question you send is a raffle entry for a chance to win an ATRAM merchandise. Winners will be announced at the end of the webinar, so make sure to stay until the end. We will also be wrapping up with a quick feedback survey after the webinar. So we do hope you can share your thoughts with us about our session today and how we can further improve our webinar series. So without further ado, I would like to welcome back ATRAM's Deputy Head of Equities Research, El Jamil. Hi, El.
Hi,
Hi,
Bea.
how are you?
Hi, I'm good. I'm good. Good to see you. How are you?
Yeah, good to see you as well. I'm good. No, it's been a long time since I got the chance to have a chat with you. And
Yeah.
if I may use this opportunity, I really just like to commend your success in the equities team. At such a young
Thanks.
age,
Thanks.
yes, at such a young age, you're already the deputy head of equities research. So what's your,
Mhm.
secret sauce, L?
There's no secret sauce. It's just being in the right place at the right time. But it certainly helps that I have around 6 years of experience in the industry, and I've been exposed to almost all of the sectors already that's present in the market. So I think that really helps, and I think the mentors along the way also really help. To get to where I am now, and then ultimately, it's like 50% luck. But I'm just in the right place, the right time.
Yeah, right. I think that's great to hear. But I have another question. So
Mhm.
I think there's a lot of things going on a day-to-day basis. So how do you keep yourself abreast of the news and at the same time get to take care of yourself since we're still in a quarantine?
Mhm. Yeah. I mean, you have to build a system for yourself, and learn to sift through the news, which ones are relevant, which ones are not, especially which ones would have an impact on your portfolio or even the names that you cover. That's especially relevant for us, the analysts, since there's there's a nonstop stream of news, day in day out, even over the weekends. So drawing the boundaries also, like even if a relevant news comes up late at night, which has been, I think, the trend lately. um, we draw the line that as long as we read the news, we digested it, that's where it stops, right? I mean,
Yeah.
there's nothing else you can do at midnight. Market's not open at midnight, so yeah.
Right. So thanks for that. So I will not prolong this further. I know that you're a very busy person. So I hand over to you. I will hand over the
Sure.
floor to you for your discussion.
Yeah, sure. Thanks. Thank you again, Bea, for that really kind introduction. And good morning, everyone. I hope you and your families are all doing well and are staying safe. And again, I want to thank you for attending this webinar. And I hope by the end of this session, you walk away convinced that Alpha Opportunity strategy and the investment process behind it works, and you would add it to your portfolio, hopefully. And at the very least, you leave more informed about the investment opportunities that you have right now, despite the current situation. But before we get into the fund and its strategy, let's first talk about what we're seeing on the ground, how it affects our recovery expectations, and how we'd want to position ourselves in line with these expectations. The elevated number of COVID cases in the past few weeks and the reversion of NCR Plus to stricter quarantine measures led us to revisit our assumptions and outlook for this year, which is now that headwinds cloud the short term outlook, pushing back the full recovery towards the latter half of 2022. And but we still see opportunities and we still see recovery, and it's just a matter of time. Now, what are the factors that we're looking at, right? As you can see from the first table to your left, the top left figure there, we're looking at inflation. We're seeing inflation pressures being felt by corporates this year. We're looking at the non-performing loans. Non-performing loans would start to peak in the second quarter of this year, and then weaker than initially expected first quarter earnings because of the reimposition of quarantine restrictions, and then the continued uncertainty on mobility restrictions. I know recently, I think we got news that we're in some sort of in between MECQ and GCQ. What that exactly means, we're still awaiting the rules and regulations for that. So having said that, we have officially downgraded our earnings forecast for this year. We expected a 45% earnings growth this year, a recovery. We cut that now to 31% as we factor in the impact of inflation on operating margins and the new restrictions. But despite the short-term challenges, we do note that the bigger picture still features a full earnings recovery going into 2022. We expect a growth of 31% for 2022 from 12%. bringing the corporate earnings in 2022 at 102% of 2019 levels. Of course, this is also helped by the signing of Create into law, which effectively cut corporate income taxes by 5% from 30% to 25%. And okay, so the graph on the right would tell you how we're approaching this year, how we're basically approaching the economic recovery this year. Right? Um, we tried to map everything that you could see, any leading indicators and even the lagging ones. First quarter earnings may show a decline year on year, as I said earlier. As you may recall, back in the first quarter of 2020, we were still sort of normal. We had a week of abnormality during the Taal volcano eruption, but that was concentrated in areas in the southern Luzon region, and then we had the 2 weeks, basically the last 2 weeks of March. That was the onset of ECQ in the country. So first quarter earnings are slowly getting reported. We have about 17% of the index. It's still a bit small, but the results have been encouraging. We're still facing mobility restrictions in the second quarter, though not as drastic as we saw in the same period last year. Recall last year there was basically no transportation, but now there was still a bit of transportation, and restaurants were still allowed to accommodate dine out, take out, and dine out. While last year there were basically no dine in, and restaurants were still scrambling to get their delivery systems in place. Right? And we're also expecting to feel as the Bayanihan 2 lapsed last year. So we would start seeing bank NPLs rising in the second quarter. But looking into the second half, third quarter of 2021, we expect mobility restrictions to be better. This is when we should see the result of the recent lockdowns, and also a higher inoculation rate of the vaccine. Supply is going to come in higher quantities, and the rate of inoculation should also increase. Earnings should also show growth as early as the second quarter. So as I mentioned earlier, the second quarter of 2020 was a really low base, right? So even in a base-to-base perspective, we should start seeing growth. Now, containing inflation and unemployment rate will be crucial. While corporates, they're still in a wait and see mode when it comes to their capital expenditures. Only a handful have given firm guidance in their capital expenditures. But by then, I think we should see a firmer guidance from them. And then further out into the latter part of the year and into 2022, we should start to see election spending trickle in. Though we also do not dismiss the possibility that this election spending could be lower or in a different form, depending on our state by then when the formal campaign period comes in. Now, having said all that, the next question is: we know there's short-term headwinds, but we're still cognizant that full recovery is still a matter of time. What are the filters that we apply when we look at our stock universe? When we look at the market, what are the filters that we apply, right? So first, the short term, we address the short term. We want to look at quality companies with resilient balance sheets and still have ample space there to accommodate any uncertainties in the short term, right? We want them to be able to tide themselves over the crisis and even have not just to retain their operations, and maybe even identify the ones that will take advantage of weakness in their competitors or any integration that they would have vertically or horizontally, right? Any opportunities basically that they see in this crisis. Prime examples of this are Wilcon and RLC. And next is high growth, right? Which could either result from high growth, which would either result from benefiting from the reopening of the economy, like Bloomberry, one of the names that we identified here, or also an emerging sector. We've seen the advent of logistics in all aspects, like last mile storage, all HC is in the warehousing portion and also in the industrial parks portion. And then Converge. Converge IPO'd last year and is showing really promising growth. They've been hitting their targets, and they're a pure play on fixed broadband. So we'll discuss the thematic plays later on. So moving on to the next slide. So yeah, the challenges near term push back our 8,300 PCA target. This used to be our PCA target, 8,300. Now we push that back to mid 2022, but we anticipate improvements by mid-year and forecast PCA to reach its year-to-date high of 7,300 by year end, and then rise past that to 8,700 by the end of 2022. So this really reflects how we're trying to navigate the current situation. So we know the 7343 is only a 3% increase from year end 2020, but it's really towards 2022 that we're looking at. With the trajectory of the factors that I mentioned earlier that we're keeping an eye on, we see PCA hitting 7,300 by year end. This is a 16 times price to earnings multiple. In 2022, as corporate earnings recover and we see election spending, and it's really in also foreign flows. It's really foreign flows potentially returning to positive. We expect PCA to re-rate back to its 5-year average of 19 times, translating to a year end of 8. That's how we arrived at our 8,700 target by year end 2022. Right. So let's talk about the sector outlook, where we're overweight, where we're neutral, and where we're underweight. Our preferences can be categorized into 3 main baskets. So first, the reopening beneficiaries. So such as property, conglomerates, airlines, consumer discretionary, and gaming. These sectors were the hardest hit when the lockdown started. They've shown sequential improvement month on month or quarter on quarter, but then we reverted again. But ultimately, we've identified the quality names also in those reopening themes, such that again, as I said earlier, these companies have strong balance sheets to navigate any softness or any surprises in the short term. We also look at emerging new economies, right? New economy and ESG. ESG is something that is now rapidly being brought into the forefront of investor consciousness. ESG is also a global trend right now that is now rapidly evolving from just it used to be just a risk metric, like do they have bad ESG or good ESG, and how much do we factor that into the investability of a company. But now ESG is now in the forefront, which dictates whether or not a company is investable or not. It's slowly evolving into that. Right. So yeah, just to go really quickly, again, in our overweights property, it's very obvious. You see malls being shut down and with foot traffic really, really low. But in the reopening theme, this is something we want to be exposed in. Also in residential. Residential, for example, the revenues there is still pretty resilient as when we reverted to ECQ and MECQ, construction wasn't really halted. Right, and we expect that the low interest rate environment should buoy residential sales, while inventory levels remain manageable. QSRs, again, in the consumer discretionary space, QSRs will benefit from more dine-in, from an increase in dining capacity, and again, gaming and airlines, some of the most affected names last year. But we chose the ones that were able to shore up cash or still have access to capital through bond or equity issuances, right? Or kept their credit lines open with their banks and should be able to tide themselves over and then position themselves. It's not just enough that they're able to tide themselves over during the crisis. We also want those that will be able to position strongly once the recovery sets in. Right? And then on the new economies again, we've seen new consumer behaviors, right? A lot of companies went through basically kitchen sink 2020 by spending as much as they could by developing their systems, their delivery and takeout systems, and any business developments there, so that they're not solely dependent on when they're allowed to do dine-in again, right? They beefed up their systems. And again, fixed broadband, right? Everybody's working from home. Um, Even though workforce capacity has been allowed on site, I think um, the demand for fixed broadband and better quality internet has really increased, and it's really sticky. Like, it's so hard. You don't really want to go back into how we were before, where we had like spotty internet and outages for days on, right? On the neutral sectors, we remain wary of banks, especially the smaller ones. Our concern is more with the smaller ones, but we take refuge in their sufficient capital buffers and supportive interventions of the government, such as FISC. Right? And then we are then underweight in sectors that were most resilient last year, like power utilities, or even the beneficiaries, so like staples and telcos. All right, so that's it for strategy and outlook. Now let's move on to a discussion of alpha opportunity strategy. Right, we want you to understand how you can take advantage of the economy's recovery through Alpha Opportunity Fund. So we'll talk about the strategy. Alpha Ops strat is very clear. Identify small to medium cap companies that have a clear growth runway that could potentially outpace the market, whether they're going through niche or emerging markets, but still retain the quality standards that we apply to blue chips. Now, the latter part is very important because the tendency for small and mid-cap companies, they're usually companies that used to be family owned or family controlled. As they grow in size, they start to professionalize, right? So this allows us to identify companies that will soon be included in major indices, such as the PISA or the MSCI. And ultimately, they transition to being a blue chip. And we want to ride that entire process. Right? We've already seen this happen to Wilcon. Wilcon is not yet a blue chip, but it was included in the MSCI. We've seen this with Bloom, who was re-included in PISA. And we think that there are a couple of names like Converge and Ascent who are in the same trajectory. Also, these companies, these second and third liners, are typically undercovered. So there's a lot of opportunities for mispricing there. And that shows in the undervaluation, wide discounts to NAV that we've identified. For example, that happened with All HC. And so far, the strategy has worked very well in the past 5 years. The fund has beaten the PISA and the MSCI Small Cap Index, the benchmark of the fund, which we'll see in the next slide. So here in the past 5 years, the portfolio has grown close to 5% versus the PISA's 11% decline in the same period. The MSCI Small Cap was even worse, a 29% decline on a price basis. And even on a total return basis, the portfolio still outperformed both indices. So this strategy works essentially, and we'll get to its peers and to its year to date and last year performance in the last year later on. Next slide, please. So as you may have surmised, it was clear there in the strategy of Alpha Op that it is inherently riskier due to the fact that small and mid-cap names are usually undercovered, as I mentioned earlier. This may be due to the stock's liquidity. So some brokerage houses or even some buy-side houses would have some minimum liquidity for them to cover it, or even the availability of information and the accessibility of management and ownership. However, we've built a robust investment process that bridges this gap through first extensive due diligence, a deep fundamental research, and a stringent risk management system, such that second or third tier names that show significant growth potential still adheres to the same standards that we apply to blue chips. Right? And in the fourth point there, this entire process has been vetted and portfolio management has been guided by more than 50 years of experience in Philippine equities. So we've talked about the Philippine market outlook and the fund strategy. How is this fund currently positioned? Next slide, please. So in the themes that we identified, the fund has currently 50% exposure to reopening plays. We believe that quality names in strong position to recover are also available at very affordable valuations. Right? Next would be ESG, 22%, at 22%. Uh, if you look at the Philippine companies relative to companies in Europe or the US, when it comes to ESG, it's still pretty young. The integration and the disclosure, it's still lagging. But compared to region, it's actually at par or even for some names, they're better. But we think that this is an opportunity to identify and invest in those that are already actively pursuing ESG even in these early stages. So first mover advantage. Um, Next would be new economy drivers, right? A close third at 16%, mainly through logistics and pure play fixed broadband. And then lastly, the deep value names that we identified. And then our cash levels still remain ample to maintain dexterity and flexibility given the near-term outlook. So yeah, to conclude, um, moving on to our next slide. So yeah, we invite you to invest in the dark horse of the market through the Alpha Opportunity Fund. This strategy is another avenue for you to invest in the recovery of the PH economy, but not really in the usual way of investing through blue chip names. But we still retain the rigid investment criteria applied to those names. Now, you may ask, like, who is this for, right? This is for investors who are willing to take on more risks and whose goal is to grow their portfolio. And in the last two slides, we'll show you how this fund has performed. So yeah, relative to benchmark, 35%, over 15%. It's an outperformance of 20.08% in the past year. Relative to peers also, it's number one. Year to date, it's only down 2.9% versus the benchmark. Benchmark's minus 10. And again, over the past year, 35%. So really, the key message here is that crisis times, it really tests the mettle of portfolio strategies. You have a lot of options there, a lot of strategies. And I think Alpha Ops industry leading performance over the crisis, and even we're still in the crisis in the past year, proves that this strategy not only works, but is the best thus far. So yeah, thank you for that, and that's the end of my presentation.
Thank you for such an in-depth discussion about the ATRAM Alpha Opportunity Fund, as well as sharing our 2021 equity strategy and outlook, L. So before we head on to the Q&A, or the second part of the webinar, let me quickly share to our audience. So at ATRAM, we emphasize on a balanced approach to help our clients build a well-diversified investment portfolio. ATRAM has a wide range of investments products, and our capabilities span across several asset classes that's meant to service the different investment objectives of each individual. If you'd like to know more about ATRAM Alpha Opportunity Fund and all the funds that we offer, please don't hesitate to visit our website, www.atram.com.ph. At this point, we can head on to the Q&A section. And if any of our viewers have additional questions, please don't be shy to send them via the Q&A tab. Not only do you get the chance to learn, but also the chance to win ATRAM merchandise, whose winners we will announce later. So, okay, Elle, are you ready for the Q&A?
Yeah, sure.
Sure,
Fire ahead.
let me read the first. What makes this Philippine Equity Fund different from the other equity funds in the market today?
Well, most of the Philippine equity funds out there are still benchmarked against the local index. So a large portion of these funds are still in the blue chips. Alpha Op is differentiated in the way that it strictly limits its universe to small and mid cap, where growth rates typically outpace the broad market where the large caps are. These names also benefit from a low base in terms of earnings and foreign ownership. So once they get into the radar, they get into MSCI, they get into FTSE or any other indices, we ride it the entire way up. So I think that's how this fund strategy is differentiated from everybody else.
Thanks, Elle. And for our investors, so what do we have to be aware if we choose to invest in this portfolio?
Yeah. So as I mentioned earlier, the strategy is inherently risky because we look at second and even third liners. And typically, the further you go down the index, the availability of information, the accessibility of management, or even the owners, they also decline, right? And usually, liquidity decreases too. So they're usually undercovered. Those are the risks that you see.
Right. So for our investors, they have to evaluate whether this fund fits their profile as well.
Yeah,
So for
their
the
risk aversion or willingness to take on more risks. Yeah.
All right. And then for the third question, so how do you find and develop investment ideas? Maybe you can share more about
Mm-hmm.
this development of investment ideas to our viewers.
Sure. Well, we employ different methods, right? For example, for emerging sectors during the pandemic, we identified them through top down. Uh, these sectors, when we say emerging sectors, these sectors might not necessarily be new. Like logistics have been around for so long, but it is only the pandemic just emphasized their importance and their growth from a drastic shift in consumer behavior. Like right? So when we look at sectors that benefit the most from a shift in consumer behavior, we then look at the players to the list, the dominant players then, right? And another way from a bottom up approach is to just look through the value chain of a certain product or a certain service. Right? So you might have like, for example, airlines who are servicing airlines or and where do airlines park? You go to airport. Who's servicing airlines? You have airport services. So it's really going through the entire value chain.
The fourth question is actually related to the third. So how do you balance risk with returns, and what metrics do you look at, Al, when you come up with a model portfolio for Alpha Opportunity?
Well, there are different ways that we balance risks with rewards. And there, forgive me for going too technical. So first, from the valuation itself, right, from the due diligence and fundamental analysis. So we bake in all the risks that we would usually be, we bake in all the risks that we perceive for the company and its discount rate and demand, and we even demand an even higher spread than what we would usually be happy with from a stable blue chip. Because again, the risk profiles are different. Operations wise, if we look at operations wise, it does not really differ that much from a blue chip. But what we do observe is that these names have a relatively harder time accessing capital, whether through debt or accessing the equity markets, than say a conglomerate, a big conglomerate. So that's when cash management uh, comes into play, and it's something that we would focus on, and also the capitalization of the company, right? We don't want any what do you call this? Any surprises, basically, in the company's capitalization. And then operationally, we are also constantly in communication with management or even ownership if they're accessible to these small to mid cap companies, as they are again more susceptible to governance issues. Now, and lastly, on the portfolio level, liquidity is the risk usually. So we mitigate this by sizing them in the portfolio.
All right. So there are a lot of questions coming in, El. So I hope you'll be
Sure,
patient in answering them. So the next
no
question is,
problem.
What can our investors expect in the performance of the market in the coming years?
Yeah. Okay. So again, I want to go back to our PSA targets, right? This year, it's flattish because of the current situation. I think our upside is only 2.8%. But further out into 2022, by the end of 2022, that's about 35% as of last time I checked last price I checked for the PSA, it's about 35%. So yeah, if when you go in now, you think of 2022 recovery.
All right. Thank you for that answer for the fifth question. I'll head on to the
Sure.
next. So during this time of pandemic, is it advisable to invest in the Philippine equities market?
Yes. Yes. Yes, it is. There are Filipino companies now that are trading at very affordable prices, at very affordable valuations, and we know that these companies are well managed, well guided, and their balance sheets are fortresses, right? So not only are they able to withstand headwinds in the near term, but they are also in a position to become an even more dominant player in their spaces, right? So yes, it is advisable, but you have to be really prudent. You have to be really sophisticated in the way you select these companies.
We also have another question that actually relates the Philippine equities market to the global market. So the question is, while a lot of global stocks are uptrend, why should we invest then in the ATRAM Alpha Opportunity Fund?
Yeah, so I think the question also answers itself, right? Global equities, especially, well, I would assume that you look at the US equities, they're already trading at premiums. They've run up significantly, right? They've they've been reaching all time highs. Not all time highs, but like levels before the pandemic. So so you would expect that their valuations are already pretty expensive. So you're already stretching for upside there, right? While Philippine equities, yes, you have to be cognizant of both realities. That we are facing near term headwinds, but a full recovery is just around the corner.
Right. So for the Philippine equities markets, we're expecting that there's still value that we can expect, right? Compared to the global stocks or the global
Mm.
equity market. All right. The next question would have to be, why do you have an underweight position for the consumer staples sector?
Yeah. So the reason is simple. They're coming from a high base. They were already beneficiaries from in 2020. And when you look at the growth rates of everything else right now, um, they it's just relative attractiveness.
What about on the mining industries? So the question is, does the fund have any exposure in the mining industries?
Mm. Right now, not yet. We're looking at the fundamental implications again for the mining names. I know that there's been significant news in the sector, right? So, but we're being really selective. We just don't want to snatch up any mining names that we can find just because of news for the sector. We know that it's a positive. We're still looking at we're still reading through the implications and also the positions of these mining names if they are actually in the position to open new mines, right? For cap, or if they have budget for capex, they have space for capex.
All right. This one is in relation to the entire portfolio in terms of review. So our participant wants to know, how often does ATRAM review and modify the fund portfolio?
Yeah, we rebalance when the fundamentals change. Um, it's really just that simple. Just because we're looking at small and mid cap, it doesn't mean that we change the way we study companies and how we like companies. We still like fundamentally sound companies. we're also in their valuations. If we already deem that they are trading at premium valuations relative to what we really think their true value is, then we rebalance.
All right, thank you. And then for the next question, it's related to timing. So the question is, isn't it prudent to wait out the market slump up until it begins to move up to start putting in investments?
Hmm. Okay. Okay. So timing is the most difficult portion of investing, right? It's the chance to properly call out the bottom and properly call out highs is very difficult. It's very very difficult, right? So we approach our approach is really just weighing out the risk reward of entering now or entering later, right? We run the risk of being left uh, by by a company's stock price if we wait until they publish their results. Results are a lagging indicator of a company's performance. Any leading indicators that we can find, right, like from checking up on the company, due diligence on the companies. That's when we make our bets.
Right. So timing really is a different topic, right? Because some people they would really consider waiting the bottom, but it's an issue of whether you can wait at the bottom and all of that. So thanks for
Mm.
sharing that, Elle. The last question that we have, Elle, it's another topic which is on the IPO. So prior to Converge IPO last year, did another stock take its place? And how do you determine when to add or replace or remove a company?
Again, it's in our fundamental analysis. Also in the theme of what we think the thematic plays are in the investment horizon that we're looking at. There's not really just one name that would replace another name prior to an IPO. Um, there would be one or two names that would take on Converge's weight, for example, since the question cited Converge itself. So determining whether to add or replace or remove a company, I think this relates back to the question about rebalancing. And we again take a look at the company's fundamentals, if anything changed, and the valuations. If we think that it is already high time that we start taking profit in a certain company.
Right. So thank you, Elle. I think that's all the time that we have now for questions. And before we wrap up, Elle, do you have any last words for our viewers?
Yeah, again, I think if you're gonna take anything away from this webinar, it's that um, alpha opportunity strategy works. It is evident in its 5-year performance, in its 1-year performance, in its year-to-date performance. It is industry leading, right? And especially in the context that it outperformed during the crisis. So its strategy works even in crisis times. And so we would expect more or less the same in the recovery and how we would look at the recovery, right? So yeah, I hope that you consider alpha opportunity as an addition to your portfolio.
Once again, thank you, Elle, for taking the time to have such an in-depth discussion on ATRAM Alpha Opportunity Fund. And thank you also to our audience. I hope that you were able to gain insights and key takeaways from today's webinar. Thanks, Elle. Now, did you know that for 1,000 pesos, you can actually invest in ATRAM Alpha Opportunity Fund, the best performing peso-denominated equity fund in the market today by using our online platform. So please tune in to know more.
Hello. To open an account with ATRAM, just visit our website at www.atram.com.ph. Here, you can learn more about all the funds and services that we offer. Our site will then guide you to our online investment platform, Seedbox, where you can start investing for just 1,000 pesos. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page. Thank you.
In case you have not registered yet for our next webinar, you may watch Seedbox's business development manager, Nicole San Luis, where she will discuss how Seedbox, Para Online, and BSP are making investing in your retirement easier. And you may do that by scanning the QR code flashed in your screen. You may also type in the link found on the left side of your screen. Again, if you have any friends who you think would like this webinar but are unable to attend, feel free to share the YouTube replay of this session. You may also visit our YouTube channel, ATRAM Studio. We would again also like to invite you to join ATRAM's new official Viber community group, #ATRAMPH Community, to stay updated on the latest announcements, advisories, and reminders. Scan the QR code or visit this link bit.do/ATRAMPH and get a chance to win ATRAM merchandise. Lastly, please answer the survey at the end of this webinar. We would really love to know your thoughts on today's topic. And on behalf of ATRAM, everyone at ATRAM, thank you again for your attendance and participation. We wish you and your loved ones continued health and safety. Have a great day, everyone.